Hey guys, so let's go right into the trades for the week, starting from December 31st all the way up to January 4th. We're going to be talking about Micron, TEVA, Dow Futures, and Apple. If you want to skip to the trade you're interested in, check the description. Let's go right into the trades.
I just want all of the money.
We've got a lot of data points to go through. Strong jobs, warning from Apple, weaker manufacturing. Put it all together for us into some kind of narrative about what 2019 looks like.
You know, one of my largest positions right now is Micron, and it wasn't always my largest position. I only had roughly about 1,000 shares of Micron at one point, but with a huge drop off, Micron went as low as $28.50. My cost average on Micron stock was around $30.50. So right now, as of Friday's close, it was $32.60, around $32.60. I went ahead and offloaded what I picked up on that cost average at a pretty nice profit. So I was really happy about that. For a multitude of reasons beyond the profit side was the fact that my exposure to Micron was so heavy in comparison to my exposure to everything else. So I want to talk a little bit about why my exposure to Micron kept going higher and higher. Now, I don't recommend always just keep buying into the same security because, you know, for all you know, that security could go down to zero or it could be worthless or useless stock. But I try to, even though I day trade stocks or swing trade stocks or try to get in and out of positions, you know, within a week or a couple of weeks, I always try to pick good names. And one of the things that was very appealing about Micron is, you know, the fact that their price to earnings ratio was so low. I do believe in the company and I do believe in the semiconductor space in general. And I think overall the company has a lot of good prospects. Even with a potential technological slowdown that people keep talking about right now, I think Micron could still be a very good stock to own. It's already halved its valuation in 2018 alone. It was at I think $61 or $62 at its peak. It's irrelevant whether it's 61 or 62 or something like that. The fact is right now the stock's at 32. Now I'm not recommending you guys buy it. Obviously, you know, you have to do your own due diligence, but in terms of a day trade, I like to find good companies at good prices just in case the market keeps dropping, so that in case it does, or we do have a span of time where the stock does continue to sell off, I feel comfortable stepping in and buying it. And that's what I did with Micron. I was able to offload 2,000 shares for about essentially $2,000 profit on that trade. It worked out for me. And like I said, if you guys do follow this approach, make sure you pick a very, very good name, or you do a diversified index like DIA or SPY or even QQQ. But don't do this with some, you know, company that you've done no research on or is high risk or anything like that. Micron still has the potential to drop lower, but this time I'm once again, now that I've offloaded a lot of the shares that I picked up at the lower cost average, I'm willing to once again buy if it goes lower. I still own more Micron in case it does go higher. I still think the price is pretty good. I don't know, you know, and it's very important right now in the market to be very nimble. The next stock is TEVA. If you guys recall, I did a video where I had lost $78,000 over the course of the week. Part of the reason I lost so much money is because of Micron and TEVA. My exposure to both of those companies were huge. It was getting to the point where I had maxed out my day trading account, the account that I've made visible to you guys on other videos. I was in margin with both of those accounts. And because those accounts, I kind of view them as maxed out, fully capitalized, I had to go into my other trading accounts to buy up more of the dip. So it was an unfortunate circumstance that I was in, that I was using my long-term accounts to buy, you know, TEVA stock, Micron stock, but I went ahead and I kept buying into the dip. I had a cost average roughly around $15.30. I had seen the stock fall as low as $14.60. It may have even fallen lower. Honestly speaking, that sell-off was crazy to watch. TEVA is actually a very well-respected company. It actually has diehard fans, the way Apple has diehard fans, which is kind of, you know, it's a little weird to see companies with diehard fans. I thought it was a fairly good name to have this double down approach. I do feel comfortable with the risk. It's not as low risk as a lot of the other names that I do this with, TEVA does have a lot of debt on its balance sheets. TEVA does have a lot of other, potentially negative things going for it. But you know what? I also feel like it has a good possibility to go up quite a bit from here, which is why I kept buying into the dip. On Friday, I had sold probably about 60% of the cost average that I picked up around $15.30. I'd sold that chunk, but I'm still holding on to quite a bit of TEVA. If it hits around 18, I'm gonna sell off the entire exposure that I picked up at that lower cost average. And that's because I still even own more TEVA in my long-term portfolio. And like I said, I don't want so much exposure to any particular name. It just so happened that the name dropped so fast that I just kept having to, cost average into it lower and lower. So my largest trade of the week took place on Thursday, and by large, it wasn't that large. I am keeping my sizes a little bit on the small side right now with both the buy and the sell. So on Thursday, Apple had announced a revenue shortfall, or an expected revenue shortfall of $9 billion. A lot of that due to weak demand in China and other developing nations. So as a result, the Dow actually had dropped tremendously Thursday morning. The Dow Futures they opened much lower, and at one point the market was overall down more than 700 points. So I can't recall exactly what price or what price point I had bought in Dow Futures, but I had bought exactly one futures contract. My sizes are usually a bit higher, but I bought one futures contract Thursday with the intent sometime Friday I can flip it for 100 or 200 point profit. I ended up selling it about a 400 point swing from the time I bought it to the time I sold it. I missed out on a lot of money, however. The market went up 745 points, pretty much reversing and then some all of its losses on Thursday. So obviously I sold it too early, but oftentimes I feel like a big mistake a lot of traders make is not taking money off the table when they know they've locked in a profit. I went ahead and I realized, okay, I can just close out this trade and make a quick $2,000. My only regret was usually when the market drops that much, I'll buy 2-3 futures contracts. I guess a lot of the talk of the bear market, I let that get to me. That caused me to buy a much lower size, as well as the fact that prior to New Year's, there was just a lot of volatility in the market. I kind of wanted to take my positions in such sizes that, hey, I'm okay with the swing. Essentially, I only bought one futures contract. That's a size contract that I feel comfortable. Hey, I can go to sleep at night. If the market's down another 500,000 points the following day, I'm comfortable with that. I might even buy another futures contract if that were the case. So as you know from my other videos, I am in Apple stock. I bought 100 shares, $156. We've seen the price drop much lower on these announcements. That is to be expected. This is a lot different than all of their previous announcements. This is Tim Cook coming in, reducing guidance, not, a bunch of rumors. God knows who spread all these rumors, but a bunch of rumors that they made no effort to just squash, right? This is Tim Cook coming out saying, hey, these numbers suck. Estimates are going to be missed by $9 billion, okay? That's just the bottom line. So the stock is going to react to that news, and it's going to react, obviously, to the downside. So the stock had dropped as low as 142 this week. I didn't actually step in to buy because I was too busy buying Dow Futures instead. It was another opportunity. I feel like I could step in and buy at these at the 140 range. And in the long run, this stock is really not going to go anywhere. It is a juggernaut. With 260 billion plus in revenue, 60 billion plus in profit, it's nowhere to hide, right? It is one of the largest players in tech right now. I always look for good opportunities to get in, and if it stays in the 140 range, I'm going to potentially scale another 50 or so shares into Apple. If it goes down even further to the 130s, I'm ready to buy again, a larger increment. If it goes higher than that, I might end up selling the 50 shares that I picked up at a discount. That's all I see it as. I'm not even really worried about the trade really in the long run. So what do you guys think about my market recap? Leave a comment, like, you can even dislike, but subscribe so you can get this week's trades next week. Happy trading.